Hey, this is Matt from InvestiQuant. Today is Tuesday, May 25, 2021. This morning we saw the markets gap up, and after an initial test higher, they rolled over and have been testing lower throughout the session. We've started to bounce a little bit as we approach the afternoon session, but we're still trading quite a bit lower than where we opened at this morning. So we're going to take a look at that type of pattern as we approach the close and see what has happened historically when you open near the highs of the session and you're trading below the open as you approach the close. So I've selected all four instruments. We're going to use an time-based entry that enters the market long at 3 p.m. Eastern Time. It'll exit at the close, which is 4:15 p.m. Eastern Time. Now, this morning, we gapped up. We opened right at yesterday's highs. So I'm just going to do gap up here because some of them were above the high, others were below the high. So we'll use gap up to capture all of those. And then next, I'm going to go into the post-open filters. This is where I can add the context around what we have done so far. So the key pieces of information that stand out is the open is in the top portion of its intraday range. So I'm going to say that the open is in the top 25% of its intraday range, and we are trading below the open as of the time of the entry that I've got selected here at 3 p.m. So I've added both of those pieces of information to the test. This is saying that at 3 p.m., the open is still in the top 25% of the range that has taken place between the open and 3 p.m. And this is testing specifically if you are trading below that opening print at 3 p.m. Eastern Time. All right, lastly, I'm going to add that we are above a 10 and 200-day simple moving average, put us in a bullish market environment, and now I can click View Results. All right, and these are the results based upon entering the market long at 3 p.m. Eastern Time, exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. When you gap up, and at 3 p.m., you are trading below the opening print, and the open is in the top 25% of the intraday trading range, and this is taking place above a 10 and 200-day simple moving average. So just to kind of picture that price action, that means you are creating a red daily candlestick with very little upper wick that is taking place. So we've got a bunch of samples to look at here. We've got 373 samples in the S&P, 404 in the NASDAQ, 341 in the Dow, 334 in the Russell. If we look at the win rates on them, they are all just at that 50-ish% mark, where you've got the S&P coming in at 49, NASDAQ 50, Dow 53, and Russell 52%. So very neutral win rate. If we look at the average win to average loss, you'll notice the average loss is larger than the average win for all four of these instruments. So for the S&P, you can see the average loss coming in there at 229 versus 177 for the average win. For the NASDAQ, that average loss is larger as well. That is also true for the Dow and for the Russell. So all four of these have fairly neutral win rates as we approach the close, but they all four have favored larger average moves to the downside. So a little bit more risk on the downside there, historically speaking. So hopefully you found that helpful. Good luck today. We'll see you next time.